Harold Angelo here, and welcome to part 3 of the Entrepreneur's Ultimate Tax Guide, brought to you by Excellence in Execution Planning. Today, we'll be reviewing the 5 simple strategies to help you manage your tax requirements and set yourself up for success. With these strategies, you can actually work with the CPA to help you develop an accounting system that's right for you. Now, if you recall the last time, we talked about the rules of the tax game, i.e. the types of taxes and the importance of business structure. We also talked about how your business taxes are actually calculated. So with these 2 bits of information, we can now really dive into these simple strategies, which if you take action on, can go a long way to helping you to protect your business. The first strategy we'll be reviewing is know your deductions. Deductions are expenses used to reduce taxable income. Not all expenses are considered deductions, so it's really important for us to understand and know our deductions so that we could better manage our day-to-day operations, as opposed to running around looking for, last-minute loopholes or last-minute tax breaks at the end of the business year or tax year. Now, there are many common deductions, and we're not going to go over all of them today. However, what we did do is we did include a chart that you can download at eneplanning.com. And in this chart are some common rules and regulations of the most common deductions used by businesses today. However, what I do want to talk about are the 4 golden rules of deductions. The 4 golden rules of deduction say that in order for an expense to be considered a deduction, it must meet 4 criteria. It must be ordinary and necessary, meaning common to your type of business. It must be a current expense, meaning paid for in the year that we are filing. It must be directly related to your business, meaning it has to be directly connected to what you do for business. And reasonable in amount, meaning fair market value for the industry that you are in. If you stick to these rules, you should be fine. And if you're responsible, you should be even better. However, you won't be untouchable, which is why the next rule is make sure your gross receipts match your banking statements. Meaning, if you state that your business made $50,000 for the year, and when looking at your banking statements, it shows that you made $100,000 for the year, well then, like Lucy, you got some explaining to do. But seriously, it's really, really important for us to set up a checking account and have a system for us to monitor our expenses, which actually brings us to strategy number 3. Establish a system to monitor expenses. It's a good idea for you to create expense reports to supplement your receipts and your banking statements. That way you monitor your deduction totals throughout the year.
Some information to include in your expense report are the amounts paid, names, locations, people involved, business purposes, and business outcomes. This way your expense report are as detailed as possible. Strategy number 4 is to limit the size of your deductions.
While you should claim every single deduction that you are entitled to, it's typically a smart idea to avoid large amounts of itemized deductions in relation to income. Having more deductions than income is typically a red flag and can signal to the IRS that either A, information is not being recorded, or B, information or money is not being reported. That's why in creating your expense reports, it's a really, really good idea for you to manage your deductions. The final strategy, strategy number 5, is to keep all tax records and documents for at least 7 years. The IRS has up to 3 years to audit your filed returns and up to 6 years to come after you if it is believed that you underreported your gross income by more than 25% on a filed return. So keep your records either digital or hard copy and make sure that they're organized so that they are easily accessible if it becomes necessary. So there you have it, the 5 simple strategies that you can use to help you manage your business tax requirements. Know your deductions, Make sure that your gross receipts match your banking statements. Establish a system to help you monitor your expenses. Limit the size of your deductions, and keep your business tax records for at least 7 years. I want to thank you guys for sticking with me through these lessons. I know that a topic like taxes is not the most exciting, but this information can be the key to helping you to protect your business if you take action on it. We all know that setting up processes and systems for your business can powerfully impact your business's success. And a system to help you manage your business tax requirements makes all the sense in the world. And is probably the most effective thing that you could do for your business today. So remember, download all of the resources mentioned at www.eneplanning.com. And if you have any questions, comments, or concerns, please email us at eneplanning@gmail.com. Again, I thank you, and until next time, keep moving forward.